This one pattern could tip the scales in favor of the bulls, but only if this is a false breakdown. Near the end of the day today, we got a symmetrical triangle pattern. And if we zoom out just a little bit, this is now targeting around 551 to the upside if it had broken to the upside. But we can see we got a breakdown and possible retest. So this appears to now be targeting around 540. If we zoom out to the 2-hour time frame, notice now how we are in a descending channel, which now appears to be pretty well defined. We could tell by the price action. We had to wait for this price action to happen before it was confirmed. Again, if this symmetrical triangle pattern would have broken to the upside, we would have been back into this big old rising wedge pattern. But since it appears to be breaking down, this is now potentially targeting around like 530, possibly even lower depending on whether or not this support holds. And if you haven't figured out yet what's happening on every Mag 7 stock, what I'm about to show you is probably going to blow your mind. So let's kick things off with the tech darling Meta. As you can see, it is in a well-defined descending channel on the 1-hour time frame. And if we zoom out to the daily, we can see we have definitely broken below this much bigger ascending channel that it was in before. So we're in a bearish stance right now. Looking at Microsoft on the 1-hour time frame, we can see that it is in a well-defined descending channel. We're kind of in the middle of the range. So technically speaking, this could go up to the upside or to the downside from here. And zooming out to the daily, remember this big rising wedge pattern that we've covered before. You know, like insert "you are here" sign right here, because this is where the patterns are happening right now. This big pattern is actually still targeting around 346 per share if this actually continues down. We take a look at Tesla, you know, that stock that everybody just loves to hate on the 4-hour time frame. We can see that it was in a well-defined descending channel, but it appears to actually have broken above that. But I wouldn't be too bullish on it just yet, because when we zoom out to the daily, we can see we're actually still below this main resistance line. Until we can get above that, this is still technically in a bearish stance. On the 1-hour time frame here for Apple, you can see another very well-defined descending channel that we're in, and we're near the top of that right now. And if we zoom out to the 4-hour time frame, remember this big rising wedge pattern that we covered, it's still targeting around 205 per share. Lo and behold, Amazon's doing the same thing on the 1-hour time frame here. Very clear descending channel. We're kind of near the top, but could come up a little bit, but more likely to head down. And the reason for that, again, is because of, like we covered before, this big rising wedge pattern. If this actually breaks down and it breaks below this main support line, this is targeting somewhere around like 154 per share. Looking at Google on the 2-hour time frame, yep, you guessed it, descending channel. And if we trace that channel down to the main support line right here, it follows that it's targeting around 154 before we'd see a reversal. And then looking at Nvidia, this is on the 1-hour time frame, very well defined descending channel. And it's actually, if I'm not mistaken, it's actually more than 20% below its all-time high right now. And as we discussed in previous videos on the daily time frame, of course, this is like over a year-long pattern. If this big rising wedge pattern actually plays out, it's targeting around $40 a share. Again, a lot of these patterns probably would take days to weeks, possibly even months to play out. If you're sick of the recent price action and you're ready to change the channel, make sure to tap that like button. On the daily time frame for the dollar strength index, the Dixie, we have this symmetrical triangle pattern here, which with the breakout, if it were to actually break below this main support line, it's targeting around like 98.80. But if this support line holds, we actually could see it targeting around 110 to the upside. And if we zoom in to the 2-hour time frame, we have what appears to be a pretty clear inverted head and shoulders pattern. This is the neckline, and the breakout target would be somewhere around 105.50, which has confluence with, you know, it's going to still leave it below this main previous support line, possibly acting as resistance. It'll have to break above that if we want to see any further upside. But in terms of seasonality, August is one of the strongest months for the dollar. And if we take a look at the VIX on the 1-hour time frame, we had a pretty well-defined rising wedge pattern, which was indicating that volatility was going to compress. But we got down here and we hit this previous ascending channel support. It's acting as support right now. If this actually breaks, then the VIX is targeting around 13. This has to break first. And just looking at what the RSI is doing, this is not the most bullish thing I've ever seen, but this is kind of looking like it wants to break back out to the upside, at least temporarily. And near the end of the day, we finally had enough price action on the ADD to form this falling wedge pattern, which is indicating that the market actually wants to break out to the upside, at least the overall market. But, you know, you got to keep in mind what's going on with the Mag 7, where they're all in those descending channels. If they're falling, can the overall market drag SPY up? That's the question. And so we've got so many catalysts coming out this week between earnings and economic catalysts. But obviously the big one is the Fed interest rate decision. And everybody's expecting them to keep rates steady. If they were to actually lower rates, I think that would be a very bad sign for the markets. I think it would be an indication that Jay Powell and the rest of the members are seeing something very dangerous going on in the markets. Right now, the markets, it is pricing in a 100% chance of a rate cut in September, probably like a 25 basis point cut, but we won't know until that actually comes out. We've got one requested ticker tonight, but before we get into it, please remember to tap that subscribe and notification bell if you're loving these videos and want more. The requested ticker for tonight is AREC. We've got our all-time high here and our all-time low here. You can see multiple support and resistance levels drawn. And the main level that we need to stay above is around 46 cents. But keep in mind, there is a demand zone here that is going all the way down to about 32 cents. So technically speaking, even if we broke below this, up until about 32 cents, you do have some support. If it were to break below that, though, there's like little to no support all the way down to 5 cents. And when we zoom into the daily, you can see this very well-defined descending triangle. Typically, these are reversal patterns. A lot of times, if it's coming down here, you've got resistance meeting an impenetrable support. Eventually, it'll break to the upside. If that happens, this is targeting around $1.24 to the upside. But if it doesn't, then we've got to zoom all the way out so that we can see that it's targeting around 3 cents to the upside, because this is all on log scale. Make sure to leave a comment below with the ticker of your choice so I can perform analysis on it as well for the next video. And as always, nothing I show is financial advice. Best of luck, cool cats.